The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. What we're going to do today is take a look at the DAX like we always do, and as you can see, it looks like we've made some type of a top-up here in the DAX because of that big 1.618 number. Now, this morning, there was a bullish news report coming out of Germany, and that caused the market to open slightly higher than the 1.618 level, but it immediately went back below it, so it still looks like it's holding up. The whole key to these markets right now, folks, is the U.S. dollar, and, of course, the euro is collapsing. We'll go into that just a little bit, but I wanted to share with you a really interesting adventure. If you ever want to go to Africa, they have a really great, let me just post this up so you can see what this looks like. You can take a ride in this Jeep, and then they throw on some fresh meat so the lions can come and eat the meat right off the front of the Jeep. The problem with this, folks, it's only telling you half the story. This is actually an amusement ride at this African wildlife park, and the lions are wild and they are eating the beef, but the problem is there is a glass shield between those people that looks like they're in a Jeep. It's actually in a sit-down place that looks like a Jeep, but it frankly isn't, so they're able to watch the lions eat. The key to this is that the people at the exhibit must clean the sheets, the seats on the Jeep at least 3 times a day. Anyway, what an amazing idea. I think that's what they're doing in some of these markets with the way they're acting. Now, I do want to, we've had a couple of questions about the market we talked about yesterday, about that gap in the Dow Jones. I wanted to go over this and just show it to you in 2 different formats. We owe this to our good friend, Norm Winsky. This is what I showed yesterday, showing you that January 91 gap that was is still the only unfulfilled gap in the Dow Jones, and that's at around, we'll show you in just a little bit here. I'll go and show you the next one because this is the actual gap that we had here back in 1991 on January the 17th when we had the Desert Storm War. As you'll notice here, you'll see that red arrow there. Now, this is from our friend Norm Winsky, as I mentioned before. And remember, Norm called for a high yesterday in the stock market. We have to take our hats off for him and also keep that hat really close by because if it goes up and makes a new high, we want to be sure to call Norm and wish him the best because we won't have him on the show anymore. So we'll see what's going on. But you'll notice here, when we had the move here, the move here, we're looking at the market that was trading at these were not E-mini contracts, folks. These were large contracts, and each penny was worth $500 and not $50. So we gapped up roughly, I think it was about 30 or 40 points, as I recall. It might have been between 30 and 40 points that day, and it was a huge move. And 30 points. When you're dealing with something, you're talking something $7,500 in one day. So you can imagine what that would be. That would be equivalent to 300-point gap in the E-mini S&P because it's 10 times the value that we were back in those days. So that's how important that gap really was. So we'll watch this with a little bit of anticipation here. We got a lot of things happening today with the euro and things, but I've been asked to talk a little bit about the information we had yesterday about the crude oil. In fact, we were watching this on Monday, and we talked about it yesterday. I want to bring up the chart to just go through, what I was trying to show you as far as, what we were looking at for a potential reversal. Now, you'll notice on this chart here, we had a 3 drive to a top pattern up there at that 5460 level. You can see it going back from August. There's also an ABCD pattern in there, but we did gap up. You remember that huge gap that we had? The problem was that it never followed through, and gaps really need to follow through. So what we'll be looking at now is we're going to take a look at what's happened between yesterday and today. In fact, we're actually much lower right now, but this is what I wanted to discuss with you so you can see it, because you're going to be looking at a market that the key point here is this arrow. If you see the arrow that we had here, you'll notice that the gap up on Sunday night continued into Monday. There was still a pretty big gap. But after midday Monday, if you'll notice that everybody that bought it Sunday all through mid-morning on Monday now had a loss. You notice that red arrow? Now, you'll notice the arrow. Now, look after the market broke down. Look how it rallied right back to where that arrow was, giving them one more chance to get out, which they didn't take. And then we went all the way down to that 50.80 level. And if you remember from the first one, we were looking at that price of 50.25 as being very important, because that's near that low that we made back on the 8th. Because if we go below the low of the 8th, which is at 49.60, and we hit 50 just a little while ago, you're looking at a major reversal here in the crude oil market. In other words, this is certainly not a valid breakout. So remember that when you're buying these breakouts, make sure that they continue, because when they don't, boy, they really make a really interesting thing. So we'll see. Okay, we had one question for one of our listeners this morning about the bond market, and that's the one we do want to talk about today, because bonds are certainly heading into the sewer, much like we would imagine. But if we take a look at this bond chart, we just made a lower low than we made, and I want to show you the difference here. Now, folks, when bonds go down, that means interest rates are going higher. The reason why is they're priced at a $100,000 bond. I believe the yield on that is 3%. So in order for the yield to get less, you have to lower the price of the bond, or to get it higher. In other words, if the yields go up, the price of the bond has to go lower. So you're paying $90,000 for a 3% bond. That means the rate would be 3.3%. So when interest rates go up, bonds go down in price. And remember, we made the top-end bonds down up at the 177 level, and now we're coming into some really interesting numbers here today. As a matter of fact, we'll just put this up today and let you folks take a look at it here. This is the long-term weekly in the bonds, and we are within a heartbeat. I'm talking about a real major heartbeat of the 61% retracement of the low 3 years ago. And we also took out the lows from 2015. That's why you're hearing all the news about two-year highs in interest rates. But this market is what we would call oversold, to say the least. We've only had a couple of up weeks. We had 2 up weeks twice in the past in the past 9 months, after we made that big butterfly pattern up at the 1.618 level. So we should be looking to be a potential for a pretty good rally here in the bonds if we decide that we're going to see that. If we take a look, and we will, we'll take a look here at this TLT, which is the 20-year note as it relates to these interest rates. And you'll also see that we are also coming down to a 1.618 expansion of last year.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we are taking a look now at the U.S. dollar versus the Canadian dollar because this has a correlation with crude oil, almost 85%. And as you can see here, this was expecting a bottom to come in around the 131.25 level. We did hit 131.01 in the midst of the big rally on Sunday. But since that time, the crude oil has collapsed. And as you can see, because of the high correlation that you have here, that the Canadian dollar has moved in the opposite direction. So that was another chart that you had to be looking at if you were in the crude oil market, because this should have been a huge move, and it did not. There were a lot of support in the dollar-Canadian trade versus the euro versus the crude oil trade, and that's why it was suspect of being a valid breakout, and especially on a Sunday night when it's extremely thin, and that's the understatement of the year. I do know that there are three players that actually account for more than 50% of all the crude trading that goes on. There's two of them in Singapore and one of them in London that does a lot of operations for several of the Saudi countries, and they really control about 50% of all the trading that goes on, as I remember. But there's still a lot of other, still 50% is still a lot because it's a huge market, but it did hold up, extremely well. Now, the reason for the big activity here today is the fact that we've had this breakdown in the euro, and that's one of the things that we really ought to talk about today, and that's what we are going to talk about. We're going to bring it up here so we can take a look at it. This is what we were talking about on the show on Monday. If you'll take a look at this, I focused this in the newsletter that we send out each week to our subscribers. And as you can see, we're looking at a price to come in here on this weekly chart at around 99. We broke below the coveted 104 level last night, and also we shattered the 105 level. And I wanted to give you folks an idea of how the euro trades. I'll put this up here so you can take a look at it. And this is a 15-minute chart which covers the last couple of days, as you can see. As soon as you'll be able to see it, just as soon as I put this up here, you'll notice that what we did was we made a 1.618 expansion of the range from December the 12th through the 14th. And if you look at the top of the chart where you see the three highs in there, you notice that that last high took out the previous high, which was the high of December the 13th, by about 3 pips and didn't go anywhere. And that is really a bad sign, because usually if a market breaks out like we seem to have had in crude oil, you're going to get some continuation. If it doesn't have that continuation, that means there was just virtually no orders there, to buy, and that means that the preponderance of orders will be to the sell. And as you can see, right after the Federal Reserve came out an hour later, and said rates were going to go higher, you notice that the euro went from 106, to 104, dropped $2,000. Notice how it went through the level, the old low at 105.20. You see how it went through there and then bounced back above it? And if you use that as a potential for as markets rally back to those old highs and old lows and touch those lines, that's why it offers such a good area for selling. And it's the same thing on the reverse on the downside. So these are things that, when you're trading foreign exchange, you really should know these. Well, trading anything, but especially foreign exchange, because you have these tremendous moves that can really be, very, very exciting. So you have to pay extra attention to them. So that's what we're looking at. Now, we're still, whether we're going to rally from here or not, we have to wait and see what's going to happen with it. But frankly, you're right, Gator. It was a 135 on a 3-hour chart, and I didn't put that in there because I didn't have much time to type it in. But it was exactly what it was, and we'll see how it continues. But it still tells us that once we broke that old support now at 105.20 will now become resistance should we rally up there one more time, which would be well over a 100 pip rally if we in fact do that. So that's the key to remember. So when they break through these levels, you have to respect them. That's basically the bottom line. Now part of what we're looking at here with some of these other currencies, if we take a look here at this, and this is very interesting because we just hit something really important just a few minutes ago. In the dollar yen, we hit 119, which was a exact 78% retracement of the high that we made back in November of last year, and it was also a 1.618 expansion from the high in May to the low in June. That was a perfect 1.618 expansion. So we had two major numbers there, and not only that, but the market backed off 140 pips from that number. So that's telling you that number is valid. So we need to watch this very, very closely. It's, we live in interesting times. Now, the one that has the most interest, and I know what everybody's thinking, and we'll go into this. We're going to start. I don't think we'll finish it in 2 minutes, but let's just take a look here at this long-term gold market, and we'll just take a look at this is the weekly gold chart. And if you'll notice here, that we're coming right now, we're within about $6 or $7 of the exact 78% retracement that comes in at 11.21 an ounce. I believe we've been down to 11.26 so far today, so we're very, very close to that level. The CD leg will be a 1.618 expansion of the AB leg. We've been watching this, with a great deal of anticipation for quite a long time. In fact, we'll put this up here so that you can see it on a chart using the ensign. The previous chart was from our good friend, Mr. A.S. over in the UK, who does a lot of gold trading. And you'll notice here that there's what we're looking at here. Okay, there's the actual number is exactly 1117 in the gold, not 1120. So that is the exact number. So we'll keep an eye on this anyway. But as you can see here, this is the area that we're looking at here is around 1120. Now remember, it stopped at the 1170 area for several days. In fact, we had a nice profitable trade out of that move. But the fact that it couldn't get going after 2 days, you have to ask yourself, why? And that's why you raise your stop as quickly as you can, because if it's not going to turn, it only has one other way to go into the downside. Don't underestimate the importance of what we're seeing in these currencies, folks, because this is real money, and it's making trips to Europe really, really cheap, and also trips to other areas of the world pretty cheap. So keep an eye on this, because we just hit above the 103 level in the U.S. dollar versus the thing. Now, we've had some discrepancies in some of these things. I wanted to bring to your attention here the XAU that we were looking at, along with the dollar index. With the gold. I wanted to show you this so you can get an idea of. Let's do the gold first. We'll come back and do the notes. I've got a pretty big presentation on the notes and stuff, but I want to do the dollar index with gold first to show you the relationship here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're taking a look now at the euro versus the U.S. dollar index, gold versus the U.S. dollar index. And as you can see, as the euro collapses, gold collapses. What you're seeing in that gold line is the reverse price of gold. That shows you the correlation, that it is the opposite of, in other words, as the euro goes down, gold goes down. As the U.S. dollar goes up, gold goes down. So that's why we're watching this very, very closely. Now, if we take a look at the relationship here between the gold-silver index And what you're seeing here in the gold market, the green line is the spot gold. Look what's happened to spot gold in the last 3 or 4 weeks, as opposed to what's been happening with the gold-silver index. Now, part of this could be that the fact that the stock market has had a bullish bias for 4 weeks, and people have been buying, just about anything in sight. The problem is that some of these things, they don't act the way that you would think that they would act. If we take a look currently what's happening with this XAU, you'll notice that just in one day, we had a drop of just about 5% in one day. So that tells us with the new lows that we're seeing now in gold that the XAU is going to come down in to make new lows. But if you'll notice between November the 14th and December the 5th, you had a really nice ABCD correction to the 50% retracement. And as you can see from this chart going back over the last 3 months, 50% has been the order of the day, and then the market has sold off. So the key level to watch now is between 1120 and 1117 in the gold. Frankly, with this only one more day to go and with the holiday season coming up, we have to be extremely careful. But let's remember that last year in December, right near the holiday season, we made a low in gold at 1030 per ounce, and nobody wanted to buy gold there, and that was a big ABCD 3 drive to a bottom with absolute perfect symmetry that you couldn't possibly miss, and we were fortunate enough, to get in on that, and that's what made it, so interesting. Fact is, we'll just review this because you're going to see it again here. Going back, this was a long-term weekly 3-drive pattern that we had in the gold, and you'll see that it bottomed, back on December, I believe it was right around December the 28th, I believe. And so it's going to be interesting to see what happens because we're going to have another retracement here, and we'll see, what's really well, actually, Mike, the big money was made on the way down during that whole thing because from 2011 at 1932 all the way down to that, $900 an ounce was that was the big money. But you had some monster rallies during that time, which is really difficult, to stay in if you hold a position, over a long period of time. Okay, now we're going to switch over here. We talked a little bit about the bonds. I wanted to go into them in a little bit more detail because we're seeing some really big divergences here that I think are important. They might not be, but we're gonna take a quick look at them here just as soon as I can find them. And I just had it up, but and like always, there we go. I found it. Not too bad on the first chart. This is pretty much up to date for this morning. Let's just get this here so we can take a quick look at it. This is what we're going to be looking at now is okay, we're going to see what's happening. Okay, hold on one second here. I've got to turn off Limit Minder. This is the Treasury notes, as we can see here, and we are looking at a market that has made a double bottom, but look what's happened in the Treasury notes, which are the shorter-term paper. This is notes are 2 years to 20 years, and bonds are plus 20. And so we're seeing a very interesting possible double bottom here in the Treasury bond market, whereas we've had a collapse in the short-term rates. The market is oversold by any stretch of the imagination. I don't think anybody that could possibly argue about that because we've had only a few up weeks in the past 7 or 8 months. Well, it's been more than 7 months because it topped sometime in June. So that's it's been a really what's going on here. Okay, Mr. Z is asking about XAU components and weightings. The best way to find that, Mr. Z, is just go to Yahoo and type in XAU, and it will bring up, it'll tell you what the components are. I'm not sure about the weightings, but it'll give you the components. And I do believe it gives you the weightings, too, because you really need that in that index because it's really important. You need to know the weightings, just like in the Dow Jones. It is not there. Shucks. Shut the front door and raise the rent. I don't know where else to find it. Try investing.com. That's really a good site. They have some really good information, and that's investing.com. By the way, I've got a really interesting tip for you Christmas folks. There is a beautiful way to crack hard-boiled eggs, folks. It's so simple. You take the hard-boiled egg, make sure it's after it's cooked, and you lay it on the table, and you lay it flat, and then you tap it on its side, and then you take your hand and roll it back and forth one time, and then the egg will pop up, and it'll be completely, be in two pieces. You don't have to worry about anything. It's really cool. It is a secret. Actually, Sarah showed it to me from a Chinese website that showed all kinds of little tricky things, and we tried the thing with the eggs, and it really worked out pretty good. So eggs have always been hard to peel, but not anymore. They're pretty easy once you do it that way. It's the neatest little thing. Anyway, we did 3 dozen eggs just to make sure that it worked, and in fact it did. Okay, there we go. There's how to do it. Okay, there's the, see, this is one of the good advantages, folks, of being in the Tiger Den here. These folks have great information. Mr. Z had a question, and bada bing, bada boom, there it is. It was answered by going to index. And the weighting of the XAU, it's all there right off of Google, so you get a lot of great information, right off the top here to take a look at it. When we come back, we're going to cover a little bit more in the bond market, and then we also want to go into the stocks. But that's what we'll be doing here very, very shortly, because we had some type of a move yesterday in the stock market. Whether it means very much or not still remains to be seen, but we'll see what happens to this as we go along here. Okay, that's basically, I think we got a break coming up here in just a minute, so we'll go to, there's one other one that's interesting here for a play in the meat markets here. We'll be able to see some of these cattle and hog positions. We'll watch this early in the week. You don't want to do anything. Holiday week is really a hard time to do any trading, folks, so we're going to have to make up a lot of things to talk about next week. I'll be off on Wednesday, the 22nd, and the 21st and 22nd. I'll be off both of those days, but I'll do the 19th, 20th, and 23rd, but I will take off the 21st and 22nd. Anyway, we're going to take a break here. We're coming back. We'll talk a little bit about the stock market things, and we'll see what happens. So let's see if we're almost ready to go here. We're starting out a little lower, but really not very much. It's just very simple retracements. Nothing's going on here.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of
trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, and we've got a caller from Boston. Jay, are you there?
Yeah, yes I am. Yeah, Merry Christmas to you.
Merry Christmas and Happy Holidays to you and your family, Jay. What can I do for you?
Thanks. Yeah, I'm looking at the TBT. I'm wondering if there might be an entry point in the near future.
Well, I think the best way to do it would be, and because you have to, I'm looking for a short in the TBT, which would mean being long bonds. So I would look at the TLT. And I think we're very, very close, probably within a few points. We've actually made the number in the notes. We've taken out the lows in the bonds by our previous low just a couple of weeks ago by just a few pips, and then we rallied, $1,000 very, very quickly. So I think we're very, very close. However, with a market with such a downtrend that we are, I would wait one more day just to be safe. You might have to pay up for it, but at least you would be assured that the bottom would most probably be in. That's the way I would handle it.
Yeah, so look at the TLT at this point.
I would look at the TLT because that's the long side of it. The TBT is the short side, which you could do that easily enough. But the TLT is it looks they're equal as far as their volume and stuff. So they trade very, very well, and they do follow a good correlation between, they're not like some of the ETFs that look like they're going to correlate and then they don't do that at all. So that's what I would be looking at.
Yeah, just for a bounce, a short-term bounce in the TLT, would you think? And then
I'd wait a day. In fact, I'd probably wait till Monday. That's what my game plan is going to be because of the fact that we did have a collapse in the German bond. It broke down below those lows of the past 3 or 4 weeks. So we want to make sure that it's kind of possible. And believe me, rates are going higher, Jay. This will be a short-term trade, my friend.
Yeah.
It might last 3 weeks or 2 months, I don't know. But, the market is so oversold that rates are going higher. The Fed is so far behind the curve on this. When Janet Yellen said yesterday that we're not behind the curve, she's being really naive because, rates turned in late June. And the Fed has just now had their second rise of a quarter point in a year. I mean, that's just and it has nothing to do with the stock market actually. So I don't think there's any problem with that. But I'd wait a day or two. Monday, why don't you call in on Monday and we'll take a look at it.
Yeah.
And we'll have a really good entry spot. But we have a 3-drive pattern going on in the bonds themselves, but the notes have shattered it. I mean, the notes have. The short-term rates have skyrocketed more than the long-term rates, as I've shown on the chart that I posted just a little while ago. So I would wait till Monday. Why don't you call in on Monday, and we'll see where we are.
Yeah, but in general terms, it's the Widows and Orphans Fund would do well with the TBT, is what we're thinking. Maybe months and even years of that. Does that make sense to you?
Well, yeah, I think it does. But realize now you've come straight down now from June to December. You're at 6 months in a bear market, and you're going to be if you go in here, you're going to have to withstand some potential heat. So just be really careful about this.
Yeah, prudence. Yeah, timing is everything, isn't it? Is it not?
It sure is.
Terrific. Well, thank you, Larry. You're great. I appreciate everything. If you think of it,
call in Monday and we'll see where we are. But we'll cover it on Monday's show, because by then we're going to have 2 more days of trading in, and we'll have a pretty good idea of what's going on. I've checked the open interest in both bonds and notes, and so we still have open interest increasing, which means people are still shorting, the bonds and the notes. There's more as the prices go down and more sellers come in. The prices, drop, so there's more selling coming in. So you'd have to wait on that.
Yeah, makes sense to me. Terrific, great.
You don't have to try to catch a falling knife. You'll be okay.
Yeah, sounds good. A little patience pays off. Thank you.
You bet. Thanks for calling in, Jay, and happy holidays again.
Yeah, same to you. Bye now.
Okay, we'll take a quick look at some of these markets now that we looked. I posted the one for the S&P showing you the weekly 1.618. If we take a look here at the IWM, it was down slightly yesterday. We have that 3 drive to a top pattern, plus we have the 1, 2, 3, 4, 5 expanding triangle. In addition to that, we also had the full moon, and it was a fabulous full moon here in the desert. It was really quite spectacular. So these are just a few of them. There's a whole bunch of them. We've seen the same thing, of course, in the Dow Jones Industrial Average. That we'll post that one. And remember, folks, that we are over the Bradley model. And, the Bradley model basically was also saying that Trump was going to be elected. And as you can see, the night of the thing, we gapped up. We actually left a gap in the Dow Jones daily here, which is an unusual situation to see what really happens. But anyway, we'll keep an eye on this, because we did make a big expansion up there, really close to that 20,000 level. And like I mentioned, I don't know if that has any magical capabilities or not, but it certainly has some things that you want to pay attention. The main thing is the U.S. dollar is broken way above the old highs at that 102. We're approaching the 104 level. The euro has broken down very badly. There's virtually that 105.20 now is going to be some pretty strong resistance if we do get a rally up in there. But it appears from the weekly charts that I posted that we are heading down towards the level of par, which will be very interesting. Remember, the euro has been all over the map in the past 20 years. It started out at a 120. We went down to 85. We went from 85 to 160, 160 back to 85 again. And so it's been all over the map. For it to go below par is not a big deal. So that's the key thing. Going back to what we were talking about just a moment ago with Jay from Boston, let's take a quick look at this notes over the last couple of weeks. As you can see here, this covers the last 6 weeks. You'll notice we had this big collapse in the notes yesterday. They dropped from 124 down to 122. That's a huge move, as you can see. You don't want to fade that wide-ranging bar. So if you'll let it consolidate in here over a day or two, you're going to have an idea that maybe there is some support coming in. But you don't have to be a hero and try to catch a falling knife on this one. It's just not worth it to watch that. So keep it in mind that that's what you want to be looking at. So that's what we're watching here so far this morning, that we're having a little bit of a bounce in the stock, so we'll see what's happening. There are some interesting levels to watch. Keep an eye on the E-mini S&P up at the 2264 level. Silver, just 1 second, Danny. I'll try to get this silver ready for you as we come up to the break. I did have a chart on it, and I wanted to bring it to everybody's attention if I can just find it. I've got so many of them for you that I sometimes don't get them all in the way that I wanted, and I'll have to. I think I got it right here. Yep, I do. We'll take a look here. But we've broken down really badly since I posted this last night. We've come down and we've matched these lows at 1620. I don't know if we took out the lows at 1620 yet. I'll update this chart. This is a 60-minute chart, and I'll update this. I did this after the close yesterday, thinking that silver might hold. The fact that gold was still collapsing, but with gold making new lows last night, I didn't update this one. So I will do that at the break, and when we come back, we'll take a look.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at an updated gold-silver chart comparison for our good friend Danny in Atlanta, and happy holidays to you, Danny, and you and your family. By the way, if you'll take a look at this U.S. dollar index as it relates to gold, and we're going to see that one next, you can see how silver's collapsed overnight, and that's easy for silver to move down at overnight, folks. It's very thin, takes very little movement of contracts to make the silver drop. Gold a little more so, but silver is real easy to move. I'm amazed at how much the stuff moves here. Now, if you'll take a look here, we'll see that the dollar index, which is the reverse of gold, in other words, as the dollar goes up, gold goes down, and we're having a huge move here. This is a weekly index, as you can see. So we're have a really strong level here that we went through last night very easily. We got above the 103 level. In fact, I believe we approached the 104 level in the dollar index. That's a 14-year high. So that's a major thing to to keep an interesting spot to watch this. So those are the main things. Now these are big numbers up here. If they break above that, anything is certainly possible. And as the old Chinese Kerr says, may you live in interesting times. As far as the bonds, I would not do anything for a day or two. I'd wait for it to slow down here. You might have to pay up for it, but at least you'll know that the bottom is in if, in fact, you have these really wide-ranging bars in both bonds and notes. Those are not good things to stand in front of. It's like trying to catch a falling knife, and you don't really have to do that. We didn't see that happening in the stock market as it was going up into Monday and Tuesday. That's why, it said that there was a possibility with this full moon that we could get a little bit of a high. So we're ending the show now. So I want to wish everybody a happy holidays. We'll be around tomorrow, of course, and early next week. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.